deregulation is beneficial. I think lower tax rates have some beneficial effect. But frankly, I'd be more optimistic if employment growth wasn't so strong. If I really thought that this was a productivity story, you would expect to see slower employment growth. So, yeah, the economy is doing better. I do think deregulation is important. I think lower tax rates is important to investment. I think that is something that is going to extend for a while. But I think if you're trying to build a case that there's some dramatic acceleration in productivity growth, which has got to be the essence of the supply side story, why is employment doing so well? And I think that's the fundamental problem you've got in terms of interpreting the near-term numbers.
You mean the employment's doing so well that we need to put the brakes on and therefore we slow no matter what, or what?
I think there is a limit to how far labor markets ought to tighten. I think you heard that from Powell, that there is a point at which the risks of overheating outweigh the alternative. That's why they are gradually raising rates. Look, economists have a lousy record of predicting productivity, and I want to be, to some extent, humble about that.
We heard that earlier. We were looking for, and what do they have a good record at predicting? We couldn't come up with anything, because the future's difficult to predict.
Fine, but if you're just reading the data, and you thought what was going on was a dramatic acceleration of productivity like we got in the mid-90s, one of the things I would argue is inconsistent with that is how strong labor demand is.
So what next year, 2019, what, 2%?
We have it a little
GDP?
above 2%.
A little above 2.
A little above 2. I think next year is a transition.
A year ago, what did you think 2018 would be?
A year ago, I had it in the high 2s, but I did not have the magnitude of the increase in spending that we got. We did expect a tax increase a year ago. We did not expect the dramatic increase in spending.
Just to go back
and just to make the point, the spending is the thing that really generates the immediate burst and then the fall off. Our estimates of the tax effects are beneficial over a longer horizon, although I will admit, I'm on the pessimistic side of the debate around how fiscal policy affects things.
Can we just go back to the 90s? Because I remember in the early to mid 90s, we did have a really strong job market. The complaint at that point, I think, was that it was lousy jobs. A lot of those jobs were not great jobs. That was kind of the takeaway from what you kind of got from that situation.
And I would argue the productivity growth, a reading of the productivity growth, it was the second half of the 90s when that really took off. So the early parts of that
seems to make sense to me, where you hire everybody you can, and then along the way you're also trying to increase productivity. But productivity seems like a tougher nut to crack than just hiring somebody and getting them in the door for the immediate need.
I would agree that when I look at what's going on in information technology, that's the thing that makes me most optimistic.
Right.
That has not seemed to come through. But if I thought that were coming through, I would expect to see a different relationship between where I think the economy is in terms of activity and what's going on the labor markets. And when I say activity, the real stuff's hard to measure, but the nominal stuff is actually pretty easy to measure. And look, there's definitely upside risks to my view, but I keep looking at a labor market that continues to grow.
We'll talk more with